Good evening. My name is Sze Teck. I'm the Director of Research for Huttons Asia. I am a property analyst, so I send my comments, my views, my analysis to the newspaper as well as to the TV regularly on the property market. And they are also frequently covered as well. So that means that I make sense also. If not, they probably will not cover what I send in. Yes. For today, we are trying to cover and to share with all of you what you can expect in the second half of 2021 and also in 2022, because some of the early indicators that we see right now from the market will actually gives us some indication of what is likely to be the case in 2022 as well. Because, for example, whatever land that you are selling now, or even on block sites or government land sale sites, if you sell today, probably it will take you 1 year to get through all the planning decisions and things, and you will come out in 2022 ready for sale. So what are all these and what can you expect from there? And of course, I will also share with you what you can expect from the market in the second half of the year, and which are some of the projects that you must definitely keep track of, because I think they are very, very attractive. Of course, I won't be able to cover all the projects. I'll just pick some out so that you can keep this on your radar. So I will start off with the overview of the first half of 2021. But before I start, probably I start by asking some questions here. You can post your answer on Facebook, or if you are logging in through Zoom, you can put into the chat as well to tell me, like, for example, home prices, will it go up or will it not go up in second half of 2021? So give me some indication of how you feel that how will the market go in 2021. I have some comments on Zoom. All of them said yes, market will go up in second half of 2021. But why is that so? That is a question we should answer as well. I mean, we are so-called practitioners in the industry itself. We should know what is happening and what is likely to happen, so that we can provide this the sound advice to our customer. So since all of you will say yes, so I will also take the stand that home prices will definitely go up in second half of 2021. Let's look at just first half what has happened. I give a very brief snapshot of what is happening around the world for you to have a very quick understanding. In the US, home prices are going up almost everywhere. Okay, now a record high in some of the cities around the US itself. Not only the US, we see UK home prices increasing at the fastest rate in 5 years. And I will have to say that all these are the latest news that I picked up from the papers about the property market in each of these different countries. Australia also the same, the price increase at the fastest pace since 2003. China as well, this headline is very, very catchy, breakneck pace. So all these prices are increasing everywhere. Even Hong Kong also, we know Hong Kong home prices, say for a short period of time, it has been going up for the past 20 years. So even now during COVID, it is hitting a 20-month high. How about in Singapore itself? So in Singapore, the private home prices now is actually at an all-time high since recovering from where? From the second quarter of 2017. We are now already up almost 19% already. Of course, along the way, there are some bumps, like we have cooling measures on 6th of July 2018. That's where after that, the prices softened a bit, but it recovered and continue going up. And then when we had the circuit breaker, prices, however, I must emphasize here is that prices did not soften. Prices, on the contrary, actually went up by 0.3%. That is really something amazing about the property market here in Singapore, and actually not just here, also around the rest of the world as well, because other places around the world also see prices going up during the circuit breaker, like what I've shown you earlier in the first few slides. And from the 1 year, from the second quarter of 2020 until now to the first quarter, prices already go up by 6.3%. So why are prices going up despite the pandemic? That is one question. Are we so-called in a bubble, or we are really having such strong demand in the market, so much liquidity and stuff that the market prices just defy all odds and continue to go up? So, but the thing here, I will share why, but through my years of observation, I'm going to share with you some things that I observed over the years from my experience, and also some of the facts also. Now, one question on people's mind will be, the prices have gone up almost 19%. So is it the right time for me to go in now? Prices have gone up so much. I think prices will come down. That is definitely on the mind of some buyers. Then, now, like 2 years ago, or close to 3 years already, in 2018, when we had the cooling measure, we had buyers who actually pull up on the night of the cooling measure itself by saying that because of the cooling measure, the market will actually come down. So there is all these things that's going on. So I want to put this to rest here by showing you two very simple analogy, okay? First thing is, when market comes down or when there's cooling measure, like what I mentioned earlier, what will buyer think? What will buyer tell you? First, you will fall further, I will wait. This will definitely come out from quite a number of buyers. I can bet my last order on this will happen, okay? Because I experienced this from some of my friends. They tell me this, I will wait. Despite us showing them past record that even with cooling measures, property prices will continue to go up. Just like just now I showed you, after July 2018, property prices did continue to go up also, in fact, by close to 9% from then until now. So these people will have this group of people will say, don't dare to buy. Because market has come down, this cooling measure definitely will fall further, okay? So you have people like this. Then when market moves up very fast, like what we are seeing now, what would they say? They are likely to tell you, this is a bubble. Market move up so fast, it will burst. Okay, I will wait. And end up, what do? Again, they don't dare to buy. So the key question here is that when market comes down, we don't dare to buy. When market goes up, we don't dare to buy. So when will we dare to buy? Is that question we'll probably have to ask ourselves also. Do we buy when the market is moving sideways, horizontal? I tell you, when this happens, buyer will tell you one thing: market is not going up, I will not buy. So that is the whole thing, whole observation that I have over so many years of, say, speaking to my friends, speaking to buyers, customers who are looking at the property market. These two things will just happen. At the end, I will always have people who don't dare to buy. But if you have seen earlier, the previous slide that I had, the market went up 19%. Despite whatever we have, cooling measures, the pandemic, it goes up. So those who have went in during the cooling measure time, now they are actually sitting on paper gains. Of course, they are not likely to sell in that sense, because there is this government policy called the seller stamp duty. If you sell within 3 years of purchase, you have to pay certain tax to the government. If it's a third year, which is likely now, because 2018 July until now, we are actually in the third year already. So they need to pay additional 4% of their selling price to the government as tax. And I think these buyers just sit around for a while longer and they don't need to pay any more tax to the government. So you can see here is that the market is really, really strong. There's ample liquidity. And if you're telling me that is bubble itself, I will tell you this. In the past, yes, I can tell you that probably there is a bubble building up when the market moves out so fast in the midst of the recession or the pandemic and all this. Because in 1995, when we look at speculation, this is actually measured by the level of sub-sales in the market. We take the level of sub-sale in 1995, divide by the total sales for that particular year. The level of sub-sale was 29%. That then is really, really a bubble. And what happened in the mid of 1996? The bubble really, really burst and the market really branched a lot. Is that possible right now in 2021? My answer is very, very unlikely. Why? Because the level of speculation measured by sub-sales is less than 1%. Right now we have, just based on until May, we have about 9,000 odd transactions. Less than 1% are actually sub-sale. Or we put it in a very more simpler way, out of 100 transactions, less than 1, or you put a maximum of 1, is actually a sub-sale. That means they sell before the project obtains its certificate of statutory completion. So level of speculation is really, really low, and the market now is in a period of strength. Why? Demand is really, really great. I can tell you this. This chart here just shows you the level of demand before COVID, during COVID, and post, during circuit breaker and post circuit breaker. You see, even before circuit breaker, the level of sales, the sales level activity is probably about in the range of 700 odd per month. We can see from the October to December of January to March 2020. When we went into the circuit breaker, of course, everything slowed down. It branched to 500 odd. But nevertheless, it's not doomsday, you see. So there is still sales that go on. And when circuit breaker was lifted and everything resumed a bit like business as usual, the level of demand that goes back, that flood the market, is really, really, I would say, unprecedented in recent years. 1,000 odd units per month in the third quarter of 2020. Then, of course, it eased a bit in the fourth quarter because we had the landmark launches actually was reduced. But then when we resume again in the first quarter of 2021, the sales volume actually went back up again to more than 1,000 units per month. And in this month, May itself, although we have a phase 2 heightened alert where for the last 2 weeks of May, from the 16th to 31st of May, where the number of viewings or at the show flat is limited to 2 per group, there are a lot of sales activity going on also, such that actually the sales volume was not affected really a lot. We estimate it to be between 850 to 900. Of course, here we are a bit conservative, we put 850, but I think we will exceed this number over here. Okay, so what are really the projects that buyers are buying in 2021? Just a very fast one. In January, Momentum Park, first project off the block for the year, it sold really, really close to 1/3 of its 1,862 units. That means about 600 units of 600 odd units over there. And then the average price was about 1,700 odd. Very much in line with whatever was being transacted at a point in time in the surrounding as well. Then, of course, in the same month, January, the Reef was launched on the last weekend of January. But of course, this news article actually came out in February because we crossed over to February, which was a working day on a Monday already. So this REIT also did superbly well. Why? Because it's actually one of the first few projects in the Greater Southern Waterfront, and then it is in one of the best location ever, because it's really very close, a few minutes walk to Vivo City and to Harbourfront MRT. And then really this is one of the last block that is so near to Vivo, because the rest are actually not really zone residential for now. And then if you want to wait again, the other plots of land will likely come out where at Keppel Club area, where the land is returned to government end of this year. And then by then, when it's actually ready for launch 2022, then the project come out maybe 2023. That is a very rough gauge and the earliest estimate of when the project will actually come out. Then February, we don't have launches. We took a side break because of Chinese New Year, because that's why just now you see the volume was actually lower. But in March, another blockbuster project again, Midtown Modern, again, it moves a lot of their units during the first day of launch, 300 units. And bear in mind that this is in the core central region, where prices are higher than what you actually find at the city fringe, like the Reef and even Momentum Park. So this price average was about $2,800 per square foot. And it just hit a high of about, I think, 4,000 odd for one of the penthouse unit. But this shows that there are a lot of buyers with that kind of liquidity in the market, with kind of firepower to actually enter the market to buy. And in April, we have a Wellview, another project in the core central region, also selling very well on the first day. Okay, this project in Prime District 9 move average $2,700 per square foot. And in May itself, April, of course, we have one more in the One North area. This area has not seen a project launch for more than 10 years. So there is a lot of pent-up demand. That's why on the very first day, they sold over 85% of their total project itself. And this month, URA is going to launch 2 sites in One North for sale. So we have to satisfy the demand for homes in this growth precinct. May, before we enter into the phase 2 heightened alert, 2 projects will actually push out for sale. One is One Bernard in the core central region. They sell about 80% of the phase 1, over 80%, at a price of the developer, say 2,650. And then Provence, this is an EC, they sell 53% of the total units at launch, which is a very good result. Because considering that just 1 year ago, there was another EC launch just beside it as well. So, and right now, EC are fetching prices above $1,100 per square foot. So these are the very so-called the projects that achieve very good sales in the first 5 months of 2021. And from this, when we look into the data itself, of course, I'm still pending the final May numbers from URA, because the new sales number are actually updated every Friday. So I'm still waiting until Friday to see the final numbers. But what we can see here is buyers are buying higher value homes. When we had a circuit breaker in 2Q 2020, the average price of home transacted is about 1.4, but it actually went up to about 1.8 in April. So there is an increase over there. So how can buyers actually afford? That is the question itself. Not only this, maybe you say there are other reasons for all this in terms of the quantum, but we can also look at the, say, per square foot also. Per square foot in terms of April versus the whole of 2020, we are seeing that buyers are actually buying homes that are actually priced much higher. In the core central region, 2006 average is the price that they pay for homes. CCR, even the RCR as well as the OCR, all saw higher prices being transacted. So you can see all these, that buyers are buying these kind of higher value homes And these are actually coming from where? Largely from Singaporeans. Because our borders largely remain closed, so you are going to see more Singaporeans buying homes, 80%. Foreigners around 4% in 2021. So that is the kind. But 4% compared to the pre-COVID, where they can come in freely, where they account for about 5%. So the numbers are actually not far off. Why? You may ask, how come the foreigners buying over here, the numbers have stayed pretty stable? One reason is because how our government actually has controlled the whole pandemic actually gives them a lot of confidence. Some of the foreigners, in a way, they were already here in Singapore during, say, the very, very first few months of 2020. They have already entered into Singapore. And before the pandemic started and when all the borders start closing, then they decided actually to stay here. That's why after they stay, they will rent, and they decided that they should actually buy a home here as well, because how safe Singapore is in terms of the whole health situation compared to many their home country. That's why some of them had stay here, commit to home, so you have a very stable number of foreigners purchasing home in Singapore. So imagine when the borders are open and foreigners are able to fly in to see the show units physically, I think they will even commit even more. So the number of foreigners buying are likely to inch up once we allow more travel for, say, vaccinated people visiting us and for us to visit other countries as well. And the buyers buying CCR homes, I said, has gone up. Of course, April we see so high is because we have homes launched in the core central region. But the thing is, how are people able to buy? That is really the question. Where are they finding the money from? We look a bit on some of the other investment aspect, for example, the stock market. Over here, this is a chart of the Dow Jones Industrial Average, the US stock market. The 1 year from we don't even need 1 year. We just need the branch in the stock market in March itself. And then we compare to, say, September last year, just a matter of 6 months. We can see that the market has recovered and now it's actually higher. And in fact, right now, as I speak, the market is actually much higher than the pre-pandemic stock market index level already. So those who had taken the risk, remember just now I put forward that two scenarios, market goes up too much, stock market, the same stock market goes up too much, it's a bubble, don't dare to buy. When stock market branch over here, that what we see from February to March, people will also be scared and say, it will fall further, I don't dare to buy. But those who dare to buy, then during March itself are really sitting on very good profits, and some of them have really exited the stock market, and some really make few $100,000. It's quite possible over there also, because we have heard some of this. And then not only that, there are people who take even greater risk by entering into cryptocurrency. This is a big chart of the Bitcoin price, how it has rose up. In fact, here I didn't even show all the way until its highest peak, which was $60,000 per coin. It goes up from 4,000 to the early part of 2021 was about $40,000. So it's a 10-time increase. Of course, right now there are a lot of movement in Bitcoin prices now that it has actually halved from 65,000 to about 30,000. So this shows how speculative this alternative investment is. And then when just now I show you the Singapore prices and I share with you the level of speculation in the Singapore property market, how stable it is, because speculation activity is less than 1% of total transaction in a year. That's where the investors, after exiting the more risky investment, decide to put their money into more stable assets, which is properties in Singapore. That's why some of this money actually came in. And how much is that? Of course, here is the government also give us some money, but this is not enough actually for you to pay anything also. But nevertheless, this amount of money they put into the pockets of residents here is actually quite a substantial amount. Okay. we look at the M2, which is the level of liquidity in the market. It includes M1, which is another type of money supply plus savings deposit, which account for any saving deposit less than $100,000 itself. So how much has that increased? Over this 1 year period from April last year until this year, actually the money supply has gone up by close to $50,000 million. That is really a lot of money. In fact, if you look earlier, the January to April, the increase there is also a lot. From 640,000 million, it went up to 680,000 million. At that point in time, that 4 months period, January to April 2020, actually M2 supply also moved up 40,000 million. And over here, we have another close to $50,000 million being added over the next 1 year. So that is really a lot of liquidity coming into the Singapore banks over here. That's why some of this money has gone into the property market. And that is, I would say, because of how safe the country here is, how well we have controlled the pandemic, as well as securing enough vaccine for the population and able to vaccine quite a substantial number of residents here. And what is this $15,000 million? What does this mean to you? For example, just now I mentioned that in April, the average home transacted is 1.8 million. So if I have to divide this 50,000 million by this 1.8 million, this can actually allow people, if 100% all these are withdrawn out from the bank and put into property, they can actually purchase 27,000 homes in Singapore. How much unsold homes we have as of the first quarter of 2021? The number of unsold homes in the market is 21,602 units. So just imagine if people, those who are holding all this cash, wants to buy properties in Singapore, they have the ability to wipe out all the existing inventory in the market. That is how scary this whole thing is. But of course, lucky for us, there is still some control because government had this embrace called the additional buyer stamp duty. So if you buy the first property for foreigners and PR, you have to pay certain amount of tax. Locals, second property onwards, you have to pay some tax. So that actually prevented some of these buyers from buying much more than they want. But nevertheless, remember, we have one very, very amazing transaction in 2021 where the entire development, Eden at Draycott Park, was sold to a Taiwanese family, where one of the family members is actually a PR here. So that really is an example to you of the vast amount of liquidity in our local market. This, of course, did not, like I said, never all go through into our property market. So what happens is that over here, you follow the blue line. I have this. This 29,000 units unsold over here. This is as of the first quarter of 2020. So it has come down to 21,000, which I mentioned earlier. So some of this liquidity over the increase in liquidity in the M2 money supply has mopped up 8,000 homes in our property market. That is just in the new home sales market. We are not talking about the resale, which the resale also seen the same amount of buying activity itself. So right now, our level of unsold homes are really, really at an all-time low. The last time we had such low amount was actually in 2016 when Shunfu View went en bloc. Okay, if we continue to sell at this kind of pace, very soon we'll hit that record low previously in 2017 where we hit 15,000. And that actually, in a way, sparked the whole market cycle moving up very, very fast. So we are really, really moving very close towards that level. So right now, there are not many choices now left in the market for buyers actually to be able to choose from. So what can we actually expect in the second half of 2021 and also in 2022? What are we going to see? So over here, I share with you some of the upcoming launches that we know. Like kicking off in July, we'll see Park Greenwich, which is the executive condominium, Canninghill, and Pasir Ris 8. These three are likely to come out in July. August time, we probably see Watergardens at Canberra. So that is another private home project. Then of course, following that, August, September, we are Canninghill, Piers. And the rest, we are just follow accordingly. But I'm not going to go through everything because there are just too much, and some of these we don't have much info actually to share at this point in time with you. So what I'm going to share with you is what we know as of this point in time and some of the relevant info we have. If you want to know more, reach out to any of our Huttons associates. They will be able to provide you with more information. So first, I will kick off with the executive condominium, EC. Just this month, one of the EC site actually tender closed, and we had a benchmark bid for the land at more than $600 per square foot per plot, and in a relatively untested area in Tengah. By and large, ECs are usually located in places like your District 19, District 27, District 28, District 20, and District 23. There are just some of the districts that you can actually find EC. But in Tengah itself, District 24, this is really the first plot of land for EC. And what is the implication of this bid itself? And if you can see from the chart over here, the second bidder and the first bidder, the difference is a mere 0.03%. So over this, just this simple thing here shows you that the market thinks that the land bid for EC in Tengah should be more than $600 already. In an area that has not an EC launched before, developers think that this is the land price. Okay, so what about more established area that will have EC? Because we are going to have a EC land parcel in Tampines that will actually close in the next few months. What will developer actually how will developer react? Because that is an established area for EC in Tampines. Will they bid again at more than $600 per square foot? If that really happens, it means that the EC price is going to see some repricing in 2022. So what does that mean for you if you are looking at an EC in 2021, which is Park Greenwich? I will just go straight to Park Greenwich. It's just another view to show you where Tengah Garden Walk EC site is actually located. Park Greenwich is actually located in District 28. For District 28, there are not many EC. There are only 2 EC. In fact, the volume of EC, the number of units of EC in District 28 is the second lowest across the entire island. And this Park Greenwich is the 3rd EC project to be offered in Sengkang. Okay, so we think that there is really going to be a lot of demand, a lot of young buyers over there, and their median income is actually pretty high, above the national median average, national median income itself. So this again has been 8 years since the last EC launch in Sengkang. The last launch was Large Acres in 2013. So that is how long and how you have seen the last EC in Sengkang itself. And this Park Greenwich is actually directly opposite actually the Cedar Hill Standard Estate area. Some units will have quite a very good view very far because of the low-rise landed estate. So do look out for this. It's going to come out very soon. Talk to any of our Huttons associates if you want to know more about this project itself. Next, I want to touch on is the Watergardens at Canberra. Again, I think coming out very soon. Just look at this bid, $650 per square foot per plot. When was this tender closed? This tender was closed in March 2020. At the start of the pandemic, that actually, in a way, at a point in time, developers actually are very worried, of the whole situation, and that they dare not actually put in a very high bid for the land in Sembawang. Canberra, this area is actually in Sembawang, just very close to Canberra MRT station. In fact, for such a good site, and then also the fact that this is just some minutes walk away, and some of the transformation that's going on in Sembawang, at Phuket, Canberra, and all this, we will expect actually developer to be a bit more confident and a bit higher for the land. But because of COVID, that's why the land price was actually much lower than we expected. And we fast forward 1 year, this is actually where Watergardens at Canberra is. So just take note that there is one HDB project over here. I just checked the TOP is in 2024. So once this project is completed, residents here will be able to walk through here and reach the MRT station much faster in that way. Okay, maybe at the point in time when this finished, one map will maybe revise this walking distance to Canberra MRT. I say fast forward 1 year later, in May 2021, look at what developers bid for a piece of land, again also in the mass market area, but this time in Ang Mo Kio. This site is also again walking distance to the MRT. The MRT, I think if I remember, is Mayflower MRT. So look at the vast difference in terms of the land price that they bid. 650 now, and then the developers are bidding at $1,118 for a mass market piece of land in the OCR for private homes. So there is this vast difference in terms of land bid. And some of the analysts out there, which I highlighted over here, underline, they say that this project is going to be launched at an estimated price of 1,900 to 2,000. Is he accurate on this? We don't know. But one thing I can tell you for sure is that when we look at some of the projects that currently, based on the projects that have already been launched, those who have a land price of 1,001, they really have been launched at $1,900. And don't forget, in this current situation where COVID has actually choked off the supply of labor from South Asia, our construction cost is climbing up. Will that be resolved in the future? We don't know. Because even if, let's say, we allow them to come over here anymore, or are we able to find alternate sources of labor so that we can still keep the construction costs relatively stable? That is really a big unknown. But for now, indications on the ground are that construction cost is going to go up. If that really happens, you can really be assured that whatever price that's quoted here is really going to become a reality. And this piece of land, let's say we take a 1 year planning period for it to be launched, it will come out in 2022. So 2022, you are going to look at the mass market condo at this kind of price range. What is the price range for mass market condo now in the in the OCR area? We look around, say in the District 19, for example. Some of the prices there are 1,500, 1,600 compared to this 1,009. That is really a big jump. So we have customers who have recognized this fact and actually went in now to commit to buying homes in the mass market. The next plot of land that next project I want to talk about is actually Pasir Ris. Pasir Ris is this is a white site that is right next to the Pasir Ris MRT station. This site is very interesting, and it's one of the very rare sites that actually have a shopping mall with homes above it, and also will be connected to a transport node. And this transport node, I'm not talking about the existing Pasir Ris MRT because it's just opposite it. It will be connected to the Pasir Ris MRT station, interchange, and there is in the so-called tender documents, they need to make an access to another MRT station. And which is this MRT station, you may ask me. It is actually this Cross Island Line. This will pass by Pasir Ris 8. If you can see from here, Pasir Ris 8 is here. So there is this portion over here that developer has to provide access down to the Cross Island Line station. Of course, here there's another future development. But we are very, very interested in this because it is really one of the very exciting launches in the second half of 2021. Really do look out for this. Why do we say so? If we look at the whole MRT map itself, when we want to talk about your transport node, your mall, and your home being integrated together or being joined together itself, there are some connectivity over there. Not many across the island. The one that I highlighted in black over here are already completed. There are a few that I think you must really keep your eyes on that are actually in the market now or will be coming up in 2021 and 2022 are these. Number one in the market now, of course, I would say at Buangkok, there's one called Sengkang Grand Residences. Look out for that. Check with your Huttons associate. Then there will be one more. There's one currently under construction. Is at Woodleigh MRT. This is the Woodleigh Residences. It is also integrated with the shopping mall and the transport node as well. And coming up, of course, is Pasir Ris, and there is one more where the land tender will close this month, which is at Jalan Anak Bukit. This is actually above the Beauty World MRT. So this will have a direct connection. This, in fact, this is an integrated transport hub. The mall and the residential home and the MRT all will be linked seamlessly. Okay, there's one more at Fort Canning, which I will explain after this, how this is actually considered one where transport, mall, and home is actually integrated and why you should look out for this. Now, this is an aerial view of Pasir Ris 8. We took this from the beach itself over here. You can see downtown east over here, and this is a vast amount of greenery that the development will actually enjoy when residents actually, this is completed, residents can move in. And not only that, I must emphasize one thing here is that Pasir Ris MRT is not going to be just a 2-station MRT interchange. It is going to be a 3-station MRT interchange. And in Singapore, there are not many 3-station MRT interchange. We probably have Dhoby Ghaut and Outram Park, which is a 3-station MRT interchange. The Punggol 9 extension will all come all the way down to Pasir Ris and join at this particular area as well. So making this area next time a very accessible area to different parts of the island. You travel on the Punggol 9 extension, you will go to Punggol Digital District. You travel on the Cross Island Line, you will get to other parts of the island, and even you can go down to Changi as well. So that's how convenient next time Pasir Ris is going to be. And this is one of the areas where you have the sea just right before your eyes also. So really don't miss this. Okay. We look at some of the prices that we have now. Sengkang Grand going at an average of 1,700 odd. Woodleigh Residences 1,900. So for Pasir Ris 8, what is the price level that we can expect? We don't have any indication right now from the developer yet, but I can tell you that because this is a MRT interchange, it is really ready to command a premium over those homes, the integrated mall, home, and the transport node. It is going to have a premium over those. Now I'll talk about Canninghill Piers. Canninghill Piers it is actually on the site of the former Liang Court, if we can remember. And this is actually by the Singapore River itself. This location, I tell you, is really fantastic. Why? Because it's one of the, in a way, a rare site beside the Singapore River, rare residential site beside the Singapore River. The other site beside the Singapore River right now in the market is actually Rive. Rive is further up of Canninghill Piers. And this site itself, like I said just now, is going to be integrated. Why? Because we are going to have a direct connection to Fort Canning MRT itself. So that's why it makes this site very rare. And we have not seen the plans, whether maybe there will be some blocks that will face Fort Canning because it will give you a very nice view over there, greenery and unblock all the way. And maybe you will have some blocks, I don't know, facing all the way towards Marina Bay area. And this all the way down to Marina Bay is really going to be unblocked also because a lot of developments here are actually low rise. And price, of course, you may ask me, we don't have any indication yet, but I can mention here is that further down this river, there is another site that has been put up for en bloc, High Street Centre, and I think the asking price for the transaction is $2,200 if I remember correctly. So if you take that as a possible transactor price, you probably do some maths here, and then you know that this project here is going to be in the range of the high 2,000 or even 3,000 level. So what can we expect next also in some of the developments coming up in 2022? Maxwell House, second time, they are successful, and in fact, developers actually bid 3.3% above their reserve price. Why? Because developers are really, really hungry for land in the market. That's why when there is competition, you're going to see prices actually are going up. We estimate the land price is probably about $1,600 per square foot, because the previous price where they go for, they were asking, it already works out to be 1,500 odd already. So in District 2, you have another project, which is One Benam. So One Benam average transacted, based on what we see from the caveats itself, is about 2.5 itself. So Maxwell House with a higher land price of close to 10% higher than One Benam, and with the higher cost of construction that is the industry is facing now, we think that the eventual selling price may be higher than what we are seeing at One Benam. And coming up, there are quite a number of plots. For example, there's one in Lentor. Lentor is slightly further north of the Ang Mo Kio Avenue 1 site, for those who are familiar with this area. And in fact, this site is actually a fantastic site because it is right at the doorstep of the Lentor MRT station. And there will be, first level will have commercial use, so there will be some shops over there to actually serve the residents over there. So if what we see as being transacted for Ang Mo Kio Avenue 1 at 1,100, this place with a better connectivity right to the next to the MRT station, I think minimum you're going to see what we have seen for Ang Mo Kio, and probably even higher and going up to $1,200 per square foot per plot. And then just now I mentioned about this EC itself. If in an untested area, developers are already confident to go in to bid to $603 per square foot per plot, what about an established area like Tampines? Will they go in and set another benchmark price of more than $600 for Tampines? We don't know, but we will likely find out soon itself. This is on the confirmed list. There are also sites that HDB and UI have released on the reserve list. One of these, of course, in Tanjong Katong, in Hyde Road area. So this area, we think 1,500 is a possible land price. And just now I say this Tampines Street 62, don't be confused by the earlier one. This is actually on the reserve list, and these two sites actually next to each other. We don't think this will be triggered for sale until the Tampines, the parcel A at Tampines Street 62 is actually sold, or the tender is closed. Then developer will probably look at whether they need to trigger this for sale or not. So if we are to put all together what has happened or what has been sold and what has launched for sale or not in the en bloc side, look at what has been sold. These are all in the core central region, in the CCR, District 9, District 11, District 2, and these sites are actually not very big. If we just assume all these sites here that I have here on the table, I only put those that are likely to be redeveloped for residential apartments. Those, although zoned residential, but they are going to be redeveloped, say for hotel use or other, say, service apartment, I have not included them in this list. I just did some estimate, probably they will yield us around 1,400 units itself. That is very, very low. Remember what I shared earlier, in January of this year, at a very, very high, we sold more than 1,600. This 1,400 is not enough to meet our demand. Okay, how about PRAPIC? That means the government land sales. Right now, based on what we have from the government, first half of 2021 is these few sites. The Northumberland has closed already, again more than $1,000 per square foot. Ang Mo Kio Avenue 1 has shared 1,001. Jalan Anak Bukit is going to close this month, end of the month. Lentor Center is in July. Then Sim Barracks Rise, Pasir and Pasir B is at One North. It will be launched for sale in June itself. So these are actually on the confirmed list, so they will definitely push out for sale. Then you have the reserve list over there. We have enough for. When we add all these up, including the reserve list, we're going to look at 5,000 units there above. Just now we have 1,004, then we have this 5,000 here. So add up, you get about 6,000 odd itself. So is this really enough? We think that currently the market is grossly undersupplied. Why? In 2019, we sold 9,912 units. 2020, pandemic year, we sold even better, really close to 10,000 unit rate. And then just in the first 5 months of this year, first quarter, we already sold 3,457. And then we plus April, which was 1,262, and May, we estimate about 850, which could be higher. We are looking at already clocking in 5,500 in the first 5 months of the year already. Of course, July will be slightly lower because we still have the 2 weeks of heightened alert where viewings are restricted. So 2021, if the rest of the year, everything goes well, I dare say that we are going to see probably 10,000 units being sold in the new home market. And just now, remember, the 21,602 units unsold is as of first quarter. We have not accounted for the April and May sales. If we take into account the April and May sales, this number is ready to come down even much further below 20,000 units. And what do we have in terms of supply coming in the pipeline? Just now, I'm only show you what is had been transacted in 2021, but there are a few more sites that has been sold in 2020 that will also come out in 2022. So what we are expecting in 2022 is around 7,400 new units being added into the stock itself. So if we are going to see 10,000 being sold this year, and then 2022 we are going to add in 7,004, are we doing enough to address that demand in the market? Seriously, I think we are not doing enough. That's why I think for the second half of 2021, the government land sales program, they are going to boost the supply, and they are going to make an announcement this month as well for the second half. What are they going to do? Because when we see this government land sales over here, when we are on the market uptrend after the global financial crisis, we know 2009, our property market went up very fast in 1 quarter. And then over the years, there were a lot of cooling measures to actually slow down the price increase until 2013, where we start to ease. So this market uptrend, government actually pushed out a lot of supply, close to 4,900 units per every 6 months to actually address the demand in the market. But when the market came down, the government, of course, you can see over here, the blue bar is actually the confirmed list. They actually reduced that to about 2,200 units every 6 months. But in this current cycle, 2017 until 2021, up cycle, what we are seeing is that the number of supply, the volume of supply from government side is actually much lower, at about 1,500 units every 6 months. So there is actually room for the government to actually increase that supply in the market to actually match that demand itself. In fact, why the government has reduced the supply in 2017 to 2021 is because there was a lot of supply to be so-called absorbed by the market, because a lot of land were actually sold in the en bloc side itself. But this has largely, the oversupply has largely eased already. Right now we are looking at undersupply situation. That's why there is actually a lot of room for the government to increase the land supply in the second half. Now here I want to ask one question over here to all of you who are actually watching together with me, is that how is the Singapore economy doing in 2021? Is it doing better or is it doing worse? You can answer on Facebook itself, or you can answer on Zoom. You are watching us through Zoom itself. Just give me some indication so that after that I will actually show some slides on the economy. Okay, I have some indication from those who are viewing on Zoom. Almost everyone has told me that the economy is actually doing better in 2021. Let's see the numbers itself and what the government is actually telling us on the ground. First, we talk about this IMF. IMF has some forecasts about economies around the world. So what they are doing there is that they have this World Economic Outlook report. If you're interested, you can go in to read the whole report, but only if, let's say, you are unable to sleep at night, okay, because the report is really thick. But I only zoom into the important segment and I pick that important segment for you, which is this. I pick out the Asia and Asia-Pac economies, how much they expect the economy to actually grow in terms of real GDP, that means account for inflation already in 2021. And Singapore over here, you can see they're expecting 5.2%. We are among one of the fastest growing economies in advanced Asia in 2021. Okay. Not only that, our government is also confident of our economy in 2021, and they say that outlook is actually brighter this year. This is despite what? Even the tighter COVID-19 rules during this phase 2 heightened alert. Even the economists don't think that this will actually slow down the economic engine for Singapore in 2021 itself. So there are a lot of this kind of positive news coming out, but is it really that positive? Are they just trying to bluff us or what? So even after that, we have this, but PMB has said that we are on track to actually ease the tightened COVID-19 curves. And when we look at, say, this number of COVID-19 cases, I just took this off the press today, we can see that it is really coming down. And we really have a very good chance when the government make announcement this week that some of the curbs will be eased. And that is really good news for everybody, because if the curbs are eased, it's good news for the F&B as well as for retailers, because that's where their business will pick up again and it will give a boost to the economy. And then, of course, PMD's speech, when he talked about the update on the pandemic, is that he's saying that COVID-19 is going to be endemic. What do we mean by endemic? That means it's here to stay with us, like how common cold, flu is going to stay with us, and we take the vaccine and then we just live with it. Just need to be careful, wear masks and all the personal hygiene and everything. So if that is the case, so it means that slowly and surely the economy is going to open up, not just within Singapore, the borders and everything for tourists, for travelers to come here, everything will slowly start to open. And that is going to be positive for the economy as well. And April, the Purchasing Manager Index, again, this is a forward-looking index to tell us how the manufacturing sector is actually performing. It shows that PMI is up. So PMI is up in positive territory, means above 50. It's actually good news because it means the factories are actually producing and actually selling goods overseas. And not only that, in May, it is also in positive territory. So all these are actually very good news, despite that we have the phase 2 heightened alert in May also. So good news really on the economic front for Singapore. And when that actually happens, when economic news are good for property market, it is also good news as well. And we know globally there's a semiconductor, the chip shortage. Our local semiconductor industry is actually ramping up the investment actually to increase the output. So again, good news for our manufacturing sector also in 2021 and the years ahead. And employment-wise, because if everybody are gainfully employed, have our income intact and everything, that's where people can start to spend, and all the economy, consumer spending, everything will be maintained and go up in 2021. So good news also coming out from the economic sector. And in April, job figures improved even further for residents. But of course, there's one not so good news, which I shared earlier, is about the construction industry. So there is this article in Nikkei Asia, which I picked up, and then this chart I want to show here for everybody is that we can understand how bad the construction industry is affected by the labor shortage itself. Not just in 2021, if you can see from this chart over here is that the dark blue here accounts for the construction industry as well as the shipyard and the process. So they call shipyard, they also call marine. So this construction, marine and process itself, they collectively put them all together. The number of workers there is decreasing year after year. 2020 we decreased. 2021, again, a lot of workers are going back home also. That's why we have lesser labor supply in the construction industry. And some of the labor here are actually being offered 3 times their salary to actually move to another company to work. So this cost eventually will go into the whole system, and consumers is going to feel that pinch by paying more for homes. That is likely going to happen for homes in 2022. So really 2022, we think that prices are going to be pushed up because of cost inflation. And that's why overall we think that prices are going to trend higher in the second half of 2021 and even in 2022 as well, because we have really a lot of liquidity in the market. Demand is really strong. Despite phase 2 heightened alert, we still are looking at 800 or to 900 units in May and probably around the same level in June also. So the outlook for us here is how we look at it. For supply, the unsold supply is actually trending down, 21,602 in the first quarter. And if we look at April and May, they are going to take away another 2,000 units itself. So you are going to see the unsold units going below 20,000 when URA released the second quarter numbers in July itself. By then, I'll give you another update on the whole market situation again. Government land sales, as I showed earlier, is really below the normal level. Despite that the market is moving upwards, we are still not supplying the same amount of land for developers. And right now, developers are really in shortage of land. They need to buy so that they can replenish their bank and then to continue to build to meet the demand in the market. And they are not getting this through the government land sales. That's why, in a way, we think the government is going to increase. And I can say confirm plus chop over here, increase the land sale in the second half of 2021. On-block supply is returning, but the supply is returning very slow. I have one whole list over there. If I say everything is sold, you're going to have addition of 1,400 units. But bear in mind that not all the units there are going to be sold. So that's why developers, if they can't satisfy their need for land from the on-block side, they really have to depend on the government to push out more land on their government land sales for second half of the year. But really, we don't know how much the government is going to increase. We hope it will be much more than what we see for the first half, which was about 1,500, slightly more than 1,000 units itself. Okay. Demand, we have very strong economic growth in 2021. So when that actually happens, people are going to see stronger demand, stronger income. They are going to be employed and everything. So they will likely to be spend more confident about their future and look at long-term assets also. And just now, remember about the very big increase in terms of liquidity in M2's money supply. If you have 1 year period, actually the M2 supply increased by almost $50,000 million. Then our employment numbers is back to growth. First quarter, April, we see that residents' employment rate actually improving. And buyers are moving some of their money here and there from risky assets over to stable assets. Like I shared, the cryptocurrency, some of the buyers have exited those and then moved their money over to properties itself. I have heard story of one HDB homeowner who actually invested in crypto and made enough actually to make the jump to a landed property. So that is really how much some of these alternative investment have made in terms of the new wealth for buyers out there. So that's why overall we think that the price is going to increase up to 8% in 2021. In the first quarter itself, we have seen price increase 3.3%. Why are we so bullish on the price growth of 8%? We have some numbers. If we have followed the SRX report on the resale market for April and May, over these 2 months itself, the resale market price has gone up by more than 2%. So with the whole new home sales over there, if there is price increase over there, so the second quarter, maybe we will see another 2 to 3% price increase and probably some price stabilization in the next half of the year. That's why 8% growth in 2021, we think it is an achievable number. So that's all I have tonight.